Three major Wall Street firms, Benchmark, TD Cowen, and Mizuho, have reaffirmed their positive ratings on four publicly traded cryptocurrency companies: Bitdeer, DeFi Technologies, Strive, and Gemini. Despite a turbulent market for digital assets, these firms are maintaining or even raising their price targets, signaling a shift in how Wall Street is evaluating crypto-native companies. The key reason, according to reports, is a strategic pivot away from pure trading models toward higher growth areas like artificial intelligence infrastructure and capital market utilities. Benchmark has kept its buy rating on Bitdeer, setting a price target of $27. The firm sees potential in Bitdeer's expansion into AI-driven mining and data center operations. At the same time, Benchmark has also maintained its buy rating for DeFi Technologies, although it lowered the price target from $3 to $2, citing near-term market headwinds. This suggests that while the firm still sees value in DeFi's long-term strategy, it's cautious about short-term volatility. TD Cowen has raised its price target for Strive from $26 to $30, reflecting growing optimism about the company's business model transition. This move indicates that TD Cowen is seeing signs of a successful pivot, possibly into new revenue streams that are less reliant on traditional crypto trading. Mizuho, on the other hand, has maintained its outperform rating for Gemini, even though it lowered its price target from $12 to $10. This suggests that while the firm sees long-term potential, it's adjusting for current market realities. Mizuho analyst Dan: most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Dolov highlighted a broader trend. The market is underestimating the speed of this transition. He pointed out that Gemini managed to sustain its trading revenue even as its overall trading volume declined by more than 50%. This is a key indicator that companies are beginning to diversify their revenue streams, a pattern that analysts believe is repeating across the sector. This shift matters because it reflects a fundamental change in how Wall Street is valuing crypto-native companies. Historically, these firms were often judged solely on their trading volumes and market exposure. Now, analysts are looking at factors like AI infrastructure development, capital market utilities, and business model diversification. This suggests that the market is moving toward a more mature and sustainable model for crypto-related firms. For investors, the maintained ratings from these firms are significant. They indicate that Wall Street still sees potential in crypto stocks, even in a volatile market. However, the lowered price targets also signal caution, suggesting that while the long-term outlook is positive, the short-term path may be uncertain. This is especially true for companies like DeFi Technologies, which is seeing a price target reduction despite maintaining a buy rating. The next signal to watch is whether these companies can continue to sustain or grow their non-trading revenue streams. If Gemini can maintain its trading revenue despite a drop in volume, it sets a precedent for other firms. The same goes for Bitdeer and Strive, if they can successfully pivot into AI and capital market utilities. It could signal a broader trend of crypto firms becoming more resilient to market fluctuations. This is not a guarantee of success, but it is a sign that Wall Street is adapting to a changing landscape. The firms that can successfully transition from trading-focused models to diversified, higher-growth strategies may be the ones that stand out in the long run. For now, the ratings from Benchmark, TD Cowen, and Mizuho suggest that the market is still open to crypto stocks, but only if they can prove they're more than just trading platforms. The next step will be to see if these companies can deliver on their strategic shifts, if they can show consistent progress in AI infrastructure. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Or capital market utilities, it could lead to renewed investor confidence. On the flip side, if they fail to execute on these pivots, the lowered price targets may become more than just a cautionary note. They could signal a broader reassessment of the sector. For now, the message is clear. Wall Street is not giving up on crypto stocks. It's just looking for a different kind of growth story, one that's less dependent on volatile markets and more on sustainable, diversified business models. Whether or not those models can deliver remains to be seen, but the fact that these ratings are being maintained is a sign that the crypto market is still on Wall Street's radar, just in a new way.